think we are live. So, a very well welcome to today's event titled Investing in Sovereign Climate Action Outlook from COP30, organized by the TPI Global Climate Transition Center, or TPI Center for short, at the London School of Economics and Political Science, and hosted at the Korean Pavilion in Belém, in Brazil. My name is Carmen Nuzzo. I am professor in practice and the executive director of the TPI Center, and I'm delighted to kickstart today's session. The TPI Center is an academic center of independent, rigorous research and data in the progress that non-financial corporates, banks, and sovereigns are making in their transition to a low-carbon economy. We are the academic partner of the Transition Pathway Initiative, hence the TPI acronym, which is an asset owner-led initiative supported by asset managers. And we work closely also with the investors who support the ASCOR project, with ASCOR standing for Assessing Sovereign Climate-Related Risks and Opportunities. Lots of acronyms. Indeed, today's event also marks the launch of the State of the Transition Report 2025, which the TPI Center has curated and is based on the ASCOR latest assessment results. The report is part of the Center flagship trilogy, complementing the State of the Corporate Transition and the State of the Banking Transition 2025 that we released earlier this year, really highlighting the breadth of our research projects at the center. We use only publicly available information when conducting our assessments to encourage transparency and accountability, and all our resources for the same reasons are publicly available, and you can find them on transitionpathway.org, our website. The TPI Center's resources are designed to support investment decisions. We're very closely linked to the investor community, but importantly also to inform and strengthen engagement both between investors and investee entities, and to foster a constructive dialogue with policymakers. And the discussants of the report, from whom you will hear today after a short presentation by my colleague who is in Belém, Antonina Shears, Deputy Director of Policy at the TPI Center, really offer a clear example of the type of engagement that we seek to promote. Before I conclude, I would like to express my gratitude to the Korean government for hosting today's event, and particularly to Vice Administrator Kim, who is from the Korea's Presidential Commission on 2050 Carbon Neutrality and Green Growth, and also to Director Kwak, who is from the Future Vision and Strategy Division of Korea's Ministry of Economy and Finance. With that, I hand over to Vice Administrator Kim, who is in Belém, for a few opening remarks, and enjoy the rest of the session.
Yeah, good morning, everyone. I am so honored to deliver my warm remarks to you. I would like to extend my gratitude to the TPI Center for holding this meaningful event at the Korean Pavilion. I am aware the Transit Pathway Initiative Center launched the Assessing Sovereign Climate-Related Opportunity and Risk ASCOR tools in 2030. The Republic of Korea was one of a group of countries to which ASCOR surveys was conducted last year. It seemed a very useful contribution to help our investors assess sovereign bonds in terms of climate action. I would like to share about the current status of Korean emission policies. Korea has reduced greenhouse gases emissions by 2% to 3% annually, thanks to expansion of clean energy and wider adoption of green technologies. However, Korea has achieved annually economic growth by 2% to 4% in the same period. However, to achieve 40% reduction by 2030, our NDC is 40% reduction by the 2030 compared to the 2018 levels. All actors, including government, industry, and the civil society, need double effort. Regarding new target, 2035 NDC, we just conclude discussion on the new target this Monday. The new target is 53% to 61%. 53 is a linear point from the highest one to net zero in 2050s. 61% is the value of that IPCC recommend all countries should reduce their emissions more than 60% from the 2019 levels. That number is 61 compared to 2018. It is very ambitious. However, new government under the President Lee Jae-myung carry out ambitious policies such as grand energy transition to renewables in order to achieve carbon neutrality, economic growth at the same time. For the energy transition, the Korean government plans to expand the renewable energy facility from the 34 gigawatt last year to 100 gigawatt, more than triple times in 2030. And also, Korean government decided to phase out all coal-fired power plants by 2040s. Also, it is pursuing an initiative to build a so-called energy highway, which aims to expand the power grid to provide electricity for cutting-edge industry and secure, stable grid operation. It will also actively foster industry leading to decarbonization by strengthening R&D projects on new technologies such as renewable energy, hydrogen-based reduction steelmaking, and others. To achieve green transition and respond to the climate crisis, enormous amount of finance are needed. The Korean government announced public-private financial support scheme to address the climate crisis, which aims to mobilize $300 billion by 2030. Also, the Korean government launched the K-taxonomy 2 years ago and set up guidelines to secure reliability and transparency for the green bond market. Furthermore, our government is considering issuance of green sovereign bond as a way to secure finance to address climate crisis. It will move forward with diverse plans to mobilize resources to expand renewable energies and to speed up decarbonization. To conclude, I would like to thank you, TPI Center, again for organizing this event today. Look forward to participant constructive and lively discussion. Thank you.
Thank you. Thank you, Vice Administrator Kim. The gratitude is ours. With that, I hand over to my colleague, Antonina, who is live in Belém.
Thank you very much, Mr. Kim. Thank you so much to the Korea Pavilion for hosting us today. We're very glad to be here. So as Carmen mentioned, I'm going to give a brief presentation of our latest State of the Sovereign Transition report. We're going to also go through a few examples of performance, of progress, especially from Korea and its regional peers. And then we'll move to a panel discussion. So I'll take the moment right now to introduce our esteemed panelists. We have online Claudia Goldmeyer, who is Head of Investment Management at APAC for APAC and EMEA and Managing Director for Singapore at Colchester Global Investors. Claudia is also a co-chair of the ASCOR project and has been involved with this initiative for many years. Online, we also have Peter van der Werf, who is Head of Active Ownership at Robeco, bringing another investor perspective, and we'll be discussing another use case of the ASCOR data by investors. We also have online Sang-hyun Kwak, who is Director at Future Vision and Strategy Division of Korea's Ministry of Economy and Finance. Thank you for joining us, Mr. Kim. And last but
Thank
not
you.
least, I'm very pleased to have Mathilde Ménard with us here today in Belém. She's Deputy Director for the Environment Directorate at the OECD to bring the international perspective. Thank you so much for being here. So I'm going to walk through our slides. We also have, we're intending to hold another webinar early next year to go into further detail, discuss other use cases for other countries as well. So I'll keep this fairly brief as an overview of our results. ASCOR stands for Assessing Sovereign Climate-Related Opportunities and Risks, as Carmen already mentioned. It's an investor-led project to assess countries and provide investors with a better understanding of how those countries are managing the challenge of climate change, both in terms of mitigation and adaptation. The TPI Center, the TPI Global Climate Transition Center, we are the academic research expert. We have developed the methodology and we provide the data. Everything you can find online, the link is on the screen. We're transparent with the methodology and with the data and the sources as well. There are a few key design principles that we used in the development of ASCOR and in the data. Very importantly, every data point that you can find on the tool is based on publicly available information. The structure of the tool is intended to be accessible and understandable to both investors and governments. The methodology is transparent. The way that we've chosen indicators is to avoid new and unnecessary additions to what country governments have to report. There's already a lot of mandates out there, for example, from the UNFCCC, and we incorporate that into our methodology. The analysis is at the national level, and we also incorporate common but differentiated responsibilities, an important topic, a really important theme and guiding principle here at COP. And to put that into practice, we assess high-income countries period for middle and low-income countries to implement the more ambitious climate policies. Lastly, the ASCOR tool is focused on assessing how country governments are managing climate risks and opportunities, not their exogenous exposure to climate risks. There are other tools available to investors to meet that need. So we're focused on the agency. What do governments have control over to manage these risks? The structure of the ASCOR tool is in 3 pillars. Each of those pillars have specific areas that we assess, such as carbon pricing, which each have a number of binary questions and quantitative metrics. So it's a highly complex and comprehensive assessment framework. We have a really brilliant team of analysts based in London who do this research all year long. So in the first pillar, there's an assessment of historical trends and targets. We just heard from Mr. Kim Korea's new NDC, and we'll be assessing that this year. We also assess, in the second pillar, different climate policies that countries will put in place to implement their target. And I mentioned already carbon pricing. There are other specific forms of legislation and regulations that can do that. The third pillar, which those in the room may not be able to see, it's climate finance. So there we look at what wealthy high-income countries are contributing in terms of international climate finance, a very important topic here at COP as well, but also domestic disclosures of funding needs and expenditures, fiscal expenditures towards climate goals. Just this week on Tuesday, we published our latest assessment of 85 countries. And this is an important growth in coverage. We now, for the first time, cover 100% of 4 key government bond indices. This is really key for investor integration into their decision-making to have this significant coverage growth. I don't know if the screen shows well. Yeah, okay. So I think in the room, the screen doesn't look good, but maybe I'll test it back and forth a little bit. I think online it may not have, well, that's fine. There's a little issue with the visual, but I'll just focus on the key message, which is country governments have made progress on setting net zero targets, but there's a lack of progress in intermediate targets. We can't really read the slide here, but I'll just skip ahead. I think that's probably best. So on this slide, this is really the key message that we wanted to bring to COP. We're fortunate to have found evidence for optimism, and I think that's really, really important to bring that to COP30 to keep the wind in our sails, as there are important headwinds as well in the opposite direction. So the evidence for optimism that I'm happy to share with you is we have found steady progress between last year and this year in terms of climate policy development, disclosures, even though the US as a very clear and highly reported on case of retreat, the rest of the world is moving forward. Not fast enough, and we need to keep running and keep accelerating. But the progress is there, and I think that's really important to share. So what this table shows you is the net movement forward or backward relative to last year for all the countries in that area. So what I would draw your attention to is especially low and middle income countries have quite a lot of green, significant steps forward. And if you take into account the much smaller sample in those groups, this is fairly significant. When we separate out the US here, this row, which is the entire assessment universe, is net positive. So we have a net movement forward, improvements, new policies, new disclosures. One last slide, or one last analytical slide is these few two talking about pillar scores. So I mentioned earlier we have 3 pillars. We've grouped these to give an aggregate picture of the performance across all the countries. So we've grouped all of the indicators in the first pillar, and then the second and third pillars are grouped together for specific methodological reasons. This is a kind of repeat of the slide I just shared. And the idea here is we still see the steady progress when we aggregate across the entire framework. For emissions pathways, this is between 2024, 2025, it's relatively flat. That's because emissions are not falling yet. They have not yet peaked. They're not yet falling at the rate they need to. But if we look at the policies that are being put in place, which actually drive future emission reductions, there is significant improvement in the average scores for low and middle income countries especially. And that's, again, the key message we want to share. Steady progress, especially in emerging markets. And that's one of the key messages, really, of the report. I wanted to give a very quick example of one of the areas that we assess, which is carbon pricing. An effective carbon price sets a high price on carbon and should cover a significant share of national emissions. So in this diagram, what we show on the x-axis is the share of emissions in the country that are covered by a carbon price. And you can see those that are above 50%, these are the countries with a more effective carbon price because it covers a larger share of their emissions. On the y-axis, we've actually plotted out what is the change relative to last year. So you can see who's moving forward, who's moving backward, and who has kept their coverage relatively stable. Mostly there's stability, so we're not seeing evidence of wholesale retreat on carbon pricing, absolutely not, except for Canada, who has withdrawn their fuel tax. So there's a specific case there to keep our eyes on. And other than that, China has actually increased the coverage very significantly of their carbon pricing system by including new sectors, including steel and cement. So China has increased the coverage, and we also see Korea and Japan relatively stable from last year, but both well above 50%. So there's high coverage of the carbon pricing systems in the region. I wanted to give a brief spotlight on East Asian countries, focusing on Korea and some regional peers. There's a bit of noise. I don't know if, yeah. There's always a little bit of noise in the COP pavilions. So just to focus first on some areas of strength, we have in China, I mentioned already, the ETS has increased its coverage. In Japan, Japan has had a framework climate law to manage, set a strategic direction for climate action, both on mitigation, and they have an entirely separate framework law for adaptation. That's really important to set a clear process across ministries to manage these two important challenges. In Korea, I wanted to highlight the climate budget tagging that the country has. So citizens, as well as investors, can investigate and analyze and look at what the government has spent towards their climate goals over the last year through the greenhouse gas reporting initiative of the government. On areas to improve, I wanted to highlight the NDC targets. So at the time of our analysis, Korea had not had one. So we're very glad and appreciative to have heard this announcement today. Korea now has an NDC, and we'll be assessing that. Japan's NDC is ambitious, but not enough to align with the 1.5-degree pathway we have. So I think there's need for further improvement there. And turning to China, they're for the first time set an absolute reduction target from peak levels, but there's not a lot of detail on what that peak level is. So in terms of disclosure, there's room for improvement. Finally, to set out a few key points of how we recommend governments integrate national transition planning. This is a new sort of language to talk about NDCs. It's really about implementing the NDC domestically among corporate and other actors. So this can start with a whole of government vision. I already mentioned framework climate laws. All 3 countries we've been talking about have their own framework climate law or equivalent executive documents in place. Policy direction and incentives are really important. For example, the emission trading schemes that we have in all 3 countries, but the price levels are still relatively low. So that's also an area for improvement. NDCs at the national level need to be translated to the sectoral level so that companies and investors can actually put it into practice. They know what that transition looks like in their sector. And Japan has released roadmaps for key sectors. What will the transition look like? That's helpful for all the entities to drive the transition. And lastly, climate investment plans, specifying funding needs and sources of finance. That's a key part of making NDCs investable, which we'll hear more from Claudia on this point. And the Korea's climate budget tagging is part of that planning process. So just before we turn to the panel, I wanted to just lay out a few key use cases of the ASCOR data. So for investors who are the primary audience of this data, there are many things that they can use the data to do. Just going through a few, it can guide portfolio alignment. So if an investor wants their portfolio to be net zero, they need to understand how different asset classes are doing on climate change. They can develop indices. They can have dialogue with country governments, analyze the sovereign debt, but also corporate debt in those countries. And there are also reporting requirements for investors, and they need to report on their different asset classes of alignment. We also are very targeted in wanting the ASCOR tool to be useful for sovereign governments. And that's why this dialogue here with country governments in all of our webinars, we want to hear from sovereigns, from debt management offices, how are they using the data? How could it better suit their needs? So far, we understand that it has been helpful to showcase progress to investors with a tool that they're familiar with. That's a very interesting use case. Country governments can also use it for peer learning because all of the information is transparent and comparable. And lastly, a hypothetical use case is that governments could use the data for the development of sovereign sustainability-linked bonds. So with that, I would like to pull down the slides, actually, so that we can see the panelists. Would that be possible to pull down the slides so we can see the panelists on the screen? Thank you so much. And for the discussion, I would be grateful to begin with Sung. So drawing on the snapshot I just laid out, what we looked at together from Korea, I wanted to hear from you about progress in Korea. What are the key priorities over the next years? We understand that Korea is planning to issue new green bonds into next year. So it would be great to hear from you from that perspective. Thank you so much.
Hello, everyone. Thank you. Firstly, I would like to thank you for all having me in this discussion. As previously, Mr. Kim already announced, Korea has already set up the NDC 2035, and ranging from the 53% to 61%. It sounds very greatly, very too much ambitious, but Korea government is sure that and have a confidence that we can meet this target in the 2035. This is because the current Korean government set up a new climate change policy. Before this year, I mean until recently, South Korea's climate policy only focusing on reducing emissions and supporting traditions. But for now, South Korea government take the NDC target, is very ambitious NDC target as a great opportunity for the new economic development through promoting new green technology and green transformation of our economy. This means that before that we take between the decarbonic development and reducing emission, we had took the position of either or approach, but for now we turned to the other position. I mean both end approach. So we are sure that we can achieve sustainable economic growth with meeting the NDC targets. Currently, so I would like to introduce first the Korea's emission permit system, emission trading system. Unlike the China's and Japanese one, South Korea's emission permit, emission trading system is a little bit unique because all of the revenue from selling the emission permit has flowed into climate change response fund, which is specified in fiscal support and fiscal investment for the green project. So I mean, through the market-friendly approach to responding to climate change, we are planning to make some virtuous circle for the green investment to meet up the NDC target. So also, before this, I mean, until last year, Korea's ETS system composed of the two phases. I mean, paid allocation and free allocation, and the paid allocations, the portion of the paid allocation is just about the 10%, but from this year to over the next 5 years, annually, we will be increasing the portion of the paid allocation of the emission permit from the 50%, 20%, 30%, 40%, and 50% very gradually. So overall, pretty simply, we are very committed to our NDC target with the global society and with the TPC. Thank you.
Thank you so much. Thank you so much, Sang. It's really great to also specifically hear you say that setting the NDC is an opportunity for growth for sustainable development. And coming to that growth question, Mathilde, from where you sit at the OECD, at the intersection, working both with the global north, the global south, developing, developed countries, how do you react maybe to the results, to some of the findings that we had in the report? Thank you.
Thank you, Antonina. And let me first thank you for the invitation to participate to the launch of your report. That's a fantastic report, a mine of information, and also a mine for some optimism, which is needed these days. So thanks for that. Let me also congratulate Korea for your new NDC and for your ambition. It's very good to see countries, OECD countries, showing ambition. So let me go back to the report. And clearly, there are optimism, but also not that good points. So that it clearly paints quite a mixed picture. And there are 2 points I'd like to do, one on target and one on climate finance. So the first one on credible targets. I mean, the report underlines that most countries, 78%, have net zero targets, which is encouraging. Translating this long-term ambition into meaningful medium-term targets has proved more challenging, more difficult. And what is striking in the report, to our view, is that almost all countries have set 2030 emissions, but only 6% of these are aligned with 1.5% trajectory. So this is a major discrepancy as a beginning. And what's more, as of September 25, when you published your report, only around 1/3 of the countries assessed in the report have published updated NDCs with 2035 targets. And this is a fundamental tool for bridging the ambition and the implementation gaps. So all of this, of course, is against the background that we are seeing emissions continue to rise over the past years. That means that there is a lot of room for improvement there. And clearly something needs to change. Second point I'd like to make is on climate finance, because the report finds that only 1/3 of developed countries contribute a proportional share towards the commitment to mobilize $100 billion for climate action in developing countries. And you know that at the OECD, we have done quite a bit of work on monitoring this, tracking this international climate finance. And we are committed to tracking the continued achievement of this $100 billion target through 2025, when the target expires. Last year, our analysis showed that the goal was exceeded for the first time in 2022, with 116 almost like billion dollars provided and mobilized by developed countries for climate action in developing countries. And now, when I speak, I mean, based on preliminary data and analysis, we can say that probably in 2023, it's the same. We're in the same situation and at a similar level. And I mean, this is a significant achievement that needs to be recognized. But your report, the State of the Sovereign Transition Report's findings that a large majority of developed countries are not contributing a proportional share. This means that we have much room for improvement again going forward. And the new NCQG, the new collective quantified goal on climate finance that was agreed last year, the COP29, will replace this 100 billion goal by beyond 2025. But many questions remain. And building on our experience in tracking the 100 million target, we are committed to contributing to this future monitoring of progress towards the NCQG. And we have, you know, what we call the climate change expert groups, CCXT, that is a OECD IEA grouping. And we are currently unpacking this NCQG and to try to contribute to a shared understanding of its scope. To support credible monitoring, of course, and effective implementation for scaled-up finance and action in developing countries. So in your report, in the State of Sovereign Transition Report, it's very encouraging to see progress among low and middle-income countries on indicators related to climate legislation, carbon pricing, and transparency in climate costing. And here, I cannot resist the temptation to see that we see similar things, you know, in the H-Lake report and the task force on net zero policies. And so, and what's important to note is that, yes, there is still action, but this action is moving a bit south and east. You know, Europe is no more the center, I mean, is no more the climate champion. And we have seen yesterday, I think, or 2 days ago in the European Parliament, some serious setbacks. So it's very comforting to see that there is still actions, mostly in developing and emerging economies. Thank you.
Thank you so much, Mathilde. And absolutely, I think bringing in the NCQG, a really key point there is it's not only developed country governments, public finance in there, but also private finance is part of the wider 1.3 trillion goal. And coming to private finance, it would be great to hear from you, Claudia. As an investor, can you share a little bit your reactions to the report? And maybe in particular, how does this information about policy, about target setting, translate into financial risk? Why is it material in your decision making?
Yeah, sure. Thanks so much for the question. And it's great to be part of this conversation. What I appreciated particularly about the latest ASCOR report is that it moves us from theory to practice. And why do I say that? Well, it's because when we talk about investable NDCs, it's not just about the ambitions on paper, which we've just heard about. It's more about whether commitments can translate into credible, financeable opportunities, which investors can trust. And that brings me to that investor perspective, whereby three aspects I think are very critical to consider. The first one is policy credibility. investors need to see that a country's climate targets, whether it's net zero by 2050 or sectorial decarbonizations, are backed by legislation, budget allocations, and implementation plans. And that's where you pointed out already earlier, Antonina, that the ASCO Pillar 2 helps us assess that very closely. Second, I would say the financial transparency. The ASCO report shows that while many countries are setting targets, as Matilda said as well, fewer are disclosing the cost of implementation or how they plan to fund it. Investors need clarity on how a country is planning to fund its commitments. And again, that's where Pillar 3 from the ASCO framework comes in with climate finance. And the third one, the last one, which I find very exciting, is the credible instruments. Sovereign green bonds and sustainability-linked bonds, or SLBs, are gaining traction. But they're also only investable, coming back to that point, if the KPIs are robust and aligned with national climate strategies. And the ASCO report here highlights very clearly how countries like Slovenia are now referencing ASCO in their SLB framework. And I would see that as a positive. It's a real huge step forward. And it means we are starting to actually see this convergence between sovereign issuers and investor expectations. So I would say, and if you turn this to someone sitting in Asia, that's particularly relevant because that's where we're seeing a region which is very diverse, and as you pointed out as well, ranging from advanced economies such as Korea or Japan to a lot of emerging economies, but they have very different vulnerabilities. And that's where the ASCO framework is very helpful, seeing this through the lens to assess both transition and physical risks. And as you pointed out as well, and what we do is when we do assess green bonds for diligence, we look at ASCO indicators, and we saw some of the strengths you already highlighted, such as the energy efficiency law and dedicated climate fund. We're also seeing innovative other products in the region, such as the Japanese GX bonds or Thailand's SLB funds or linked bonds, which finance climate targets. And don't forget, Asia needs a lot of transition finance because it's heavy reliance on coal. So blended finance and labeled bonds can help here, but they can only help if they're backed by credible strategies, transparent disclosures, and robust KPIs. So just in sum, what we need is credible policies, transparent financing, and robust instruments, which are then underpinned by standardized data like ASCO that make NDCs investable.
Thank you so much, Claudia. It's important to share this message of what are the investor expectations when it comes to disclosure? What are the things that investors want to see to understand the credibility of an NDC and of a net zero target, for example? Coming to you, Peter, with another investor perspective, we're very excited about your use case of the ASCO data. So maybe you can tell us a little bit about that and how more in general ASCO data and this report in particular maybe have changed or contributed to the ways that you engage with sovereign governments.
Yes, thank you, Antonina, for this opportunity to speak here on behalf of Robeco. So Robeco has been working on basically interpreting sovereign data already for 15 years. We built our country's sustainability ranking, and that has fueled a lot of our work, including also in sovereign engagement. But over the past years, we've really embraced also ASCO as a delivery mechanism for a lot of the insights that ultimately we can work with a broader set of clients when it comes to assessing sovereign risk, but also sovereign opportunities. And over the past year, we have been working on developing a Robeco climate change ETF, which invests in sovereign bonds. And basically, what the sort of question was that the client asked us to work on with them is how can we replicate the returns that we would otherwise get from investing in an index-linked product for European sovereign bonds. But then we want to actually start rewarding and tilting towards governments that have better climate commitments in terms of how that ultimately sits in what is measured in Pillar 1. And then also what is then actually being financed. So how do we find this back in these national budgets? And I think this is where we have developed a methodology where year on year we start to shift more weight into the investment product into countries that are really then also backing up their initial targets and commitments with then also the climate finance that is needed, which they find back in Pillar 3. And I think this is really where we think this is an interesting but also a very innovative way of rewarding countries for better climate performance, because this ultimately will start shift capital towards those that have indeed both best legislation, but then also the budget plans to really finance that. And I think this is for us a very exciting opportunity. We have just launched the product. We have our first clients coming in, and we're very excited to also see how we can scale this up. And then the next step in developing this will then also be starting to reach out to those individual governments, start our sovereign engagement program with them, so that we can ultimately also explain why ESCOR is so important and why they should engage in the process of providing information so we can better assess their opportunities and risks around climate change. But then also, as they start to develop more sophisticated plans, this will ultimately then also help them to attract more capital from sustainable investors that really want to steer with their allocation to sovereign bonds, also in terms of delivering on their climate objectives. So this is, in short, I think, a very exciting space where ESCOR really has been sort of foundational in terms of enabling us to deliver this solution to our clients.
Thank you so much, Peter. And actually, this is an instrument that in some ways is helping to deliver that international climate finance. If you guide investments towards those countries that are making the transition, that's actually contributing to that broader goal of driving transition finance. Coming back to you, Sang, if that's all right. You already mentioned a little bit about carbon pricing actually in Korea in your previous answer, and I just wanted to dive into that a little bit more. So we know Korea, Japan, and China all have emissions trading systems. So from your perspective, what is the role of carbon pricing in guiding investments in Korea? How has that process been developing?
Okay, thank you. Thank you for your question. So actually, reducing the carbon emission is our key and very ultimate goal, but it is unavoidable to compromise the economic development momentum in the process of going green. I mean, going carbon neutrality. So in this sense, any climate change policy should be balanced between going green and keeping economic momentum. So in this context, so we do believe government needed to have the market-friendly system for going green and implementing green policy. So I think South Korea government strongly believe that ETS system is a very important role to the going green policy, and carbon neutrality policy is very implementable and very feasible, and also it can drive the private sector to reduce carbon emission in very autonomous way. I think it's definitely is possible. It would be one option for the government to force private sector to reduce carbon emission by regulation and law, but I don't think those approach would not be sustainable, because I mean many ordinary people and many companies need make a profit and economic prosperity. So in this sense, ETF system could be a big player to our NDC target. Is very implementable and feasible, and also we can through operating ETF system, we can get the political support from the National Assembly and our industry. I do believe the getting, apart from the financial support, I think getting the political support from National Assembly and ordinary people is very important for success of the green climate climate change policy. This is because all of the government budget plan and fiscal plan should be approved by the National Assembly. So we are strongly believe that government also needs to focusing on getting the political support from industry and yeah. Thank you.
Yes, absolutely. Thank you so much, Sang. Thank you so much, Sang. And exactly, that's right. Getting the incentives right to bring the private sector along the way. I want to leave a bit of time for questions. So maybe the last question I'll ask the remaining panelists. We can keep it rather short, and then we'll come to questions online. I do have colleagues who are in the chat, in the webinar, who are answering questions in writing as well. So hopefully that will help address most of the questions. So Claudia, if we could come to you, you mentioned actually a little bit about labeled debt earlier. Can you dive into that a little bit more? How has Ascor contributed to your analysis of labeled bonds, maybe green bonds, also sustainability linked bonds? You mentioned Slovenia. Yeah, just a bit of more detail how you analyze those. Thank you.
Yeah, sure. Thank you. And actually, I might as well answer a question in the panel here as well. How are ESG labeled bonds included in the analysis? So basically, how we at Colchester look at it, we use a very structured, evidence-based approach in assessing labeled sovereign bonds and climate risks. So it's not just if a green bond is having a green leaf on Bloomberg, that's what we're using it. It's much more about the understanding what a country's financing policies are aligned with its climate transition strategy. So that's when we launched back in 2019, the Green Bond Program, as we wanted to support that shift for countries to lower carbon economies. And so it's what we use is the Ascor tool as one of many tools in assessing if an issuer is really, aligned with its climate policies. And why the Ascor framework comes in so useful is because it gives us a consistent and independently assessed data set in evaluating sovereigns' climate performance. And it's across all three pillars, the ones that Antonina showed, in the emissions pathway, climate policies, and climate finance. But I would say particularly if we, noted earlier, the Korea's sovereign green bond issuances next year, when we carried out some initial due diligence work, we used particular Pillar 2 indicators. And I would like to compliment here as well the Korean authorities that we found very notable strengths, mostly, robust energy laws, efficiency laws, forward-looking green job strategy, strong adaptation disclosures, also included regular updates to its national adaptation plan and monitoring process reports. And as you already mentioned, climate budget tagging. So those are very clear signals and serious intent and show institutional readiness. And that's what we use the Ascor for. And on top of it, it also helps us identify areas of improvement where we can then engage more meaningfully with policymakers. And again, I would like to stress, engagement is not to be seen as a criticism. It's supposed to be constructive. And that's what's so great with working in Korea is this open dialogue and this proactive engagement with international investors, because this is exactly this kind of transparency and collaboration we need to build this trust and mobilize capital. So I think what's important is you can do engagement bilaterally, but also collaboratively, which we do with the PRI sovereign engagement work on climate change, as the pilot started out in Australia, most recently in Japan. And ASCO there again grounds these in conversations shared, which are verified data and making them much more productive. So again, labeled bonds are a powerful tool, but only if they're backed by credible KPIs, clear budgets, and strong governance. So again, Korea is definitely taking meaningful steps towards that direction. And I hope that also answers the question online as well.
Thank you. Thank you so much, Claudia. And really thinking forward into 2026, into these new green bond issuances from Korea to understand there's demand there from Colchester and interest in these issuances. And actually turning now maybe to this week, we are here. I'm very lucky to be here with Mathilde in COP in Belém. Maybe you can tell it's quite hot. And we wanted to share a little bit about what it's like here, what it's like on the ground, and get a sense from you, Mathilde. So this COP has been framed around action agenda, around implementation. So the negotiations are one thing. There's also plenty happening in non-negotiating spaces. What are some outcomes across that whole range of activities that you would like to see by the end of next week?
I think, globally, what we have been suffering for is an ambition gap and an implementation gap. So, and at this COP, what a key focus is the NDCs, this third round of NDCs, because it's an opportunity to course correct. So there is a lot of discussion about these NDCs and, countries coming with their new NDCs, etc. And here, what I would like to mention is that at the OECD, together with the UNDP, we have revisited the economic case for ambitious NDCs. And we have done a report that is called Investing in Climate for Growth and Development, the Case of Enhanced NDC. And this report basically shows that with ambitious NDCs, provided that they are implemented and investable, so these are two, it's not automatic, you can get to higher growth, to better jobs, to higher SDGs, etc. So this is a very important, I think, narrative these days to counter some headwinds. It's important to be ambitious in your climate action, and this will support growth and development. But as I was saying, this is not automatic. And what we see that is very important, and a lot of discussion here at the COP, is that you need to align these NDCs with the national development strategies and the investment strategies. So the NDCs are not like lying there and, they need to really be aligned. And you need also to build public ownership and political ownership across the governments, having a whole of government, having the centers of governments, the ministries of finance absolutely involved in these NDCs and their implementation. And a third point that is super important, and I think that's where we have failed somehow collectively so far, is to put the affected stakeholders at the center of the transition, the center of the discussion, because that's why we are currently having political backlash, because we have not done so or not well enough. A fourth point I would like to make is that to engage the private sector. So this is, I think, also very clear. The COP and this action that the private sector is very present and committed. And it's another, sign of optimism for us. And also, of course, optimize public finance, strengthen international support, etc. And I would like to mention one point that Selvin Hart, mentioned in an event two days ago, saying that don't forget that 185 minus 1 is still 184. So it's a bit like what you show in your transition report. There is still action more in the south than in the north, but there is still action. So there is still optimism.
Thank you for that. I'm glad that our research echoes each other too, that we're finding similar trends. Just before we go to the questions, and we're more or less running out of time, but Peter, do you have any recommendations? I know you're not here with us in Belém. What are you looking for from the investor perspective in terms of outcomes of COP30 this weekend next?
Yeah, thanks, Antonina. I have two points that I'd like to make sort of very shortly. One of them is indeed some of the positive news that was published today by the Australian government, building also on Claudia's point, is that sort of a collective voice of investors can really help governments to bring forward plans. So over the past years, we've engaged with the Australian government. We met with the Minister for Climate Change and the Treasurer last year with a group of investors in Canberra and asked for an investable NDC. Today, the Australian government, Departments for Climate Change and Energy and Water, came out with their blueprint for how the NDC can be seen as areas for investment, which are highlighted and which they have then made part of their plan. So I think this is also a very good way of where investors and countries can really work together. And then another element that I'd like to highlight, which is really my sort of expectation or hope for COP that it will deliver a strong signal, is the Tropical Forest Forever facility. From my perspective, this is a key opportunity for governments coming in with sponsor capital and for institutional investors to participate in the market trends to ultimately fund a very significant fund that can start to reward tropical forest countries for protecting their forest. And this is one of the no regret cheapest opportunities to really invest in climate resilience, because keeping those forest standings, those primary forests, is a key element into the future of really preserving climate stability. So from that perspective, I hope we've seen 5.5 billion being committed in the run-up to COP last week. I hope there are still governments working on commitments or will be coming at a later stage, and I think that is a key element that we're looking forward to, and also as institutional investors are keen to support.
Thank you so much. And it's an example of collaboration across private and public sector, exactly that we absolutely need to see. So I want to apologize. We don't have very much time for questions. If there are any in the room, please raise your hand. Otherwise, I'll take one from the online audience very briefly. And as I mentioned, we're planning to hold another webinar early next year. We will dedicate more time to the Q&A so we can go through more questions, but please email us if you have any further questions. tpi.center@lse.ac.uk. It is a question for Sang, and if you can keep it very brief, maybe 1 minute just as we close. Given the political and financial challenges and opportunities that you discussed today, what are the most significant barriers to national climate action in Korea, and perhaps more widely in the region, but maybe just focusing on Korea? What are the barriers? Thank you.
Yes, the CO2 barrier is the objection from the manufacturing industry sector, because unfortunately, this sector still highly rely on the carbon emission infrastructure, and also some objection from the SMEs. I mean, these SMEs don't have any, it's not affordable to use the renewable energy and low carbon emission system. So it was a very CO2 barrier. But government finally succeeded to persuade them to join our green policy through our government fiscal and financial support to green project, and including the tax exemption and financial support. Thank you.
Thank you so much, Sang. Thank you for answering that. I have just 1 minute left, and I had a closing question for all the panelists, but I think I'll just ask it to Mathilde, if that's all right, because you're here with us in Belém. I wondered if you could share just a little bit of the feeling, what it's like to be here in COP30 with our online audience, and share one thing that you've seen here, it can be small or big, that has brought you hope, that has energized you in this climate fight.
Well, I just think that the fact that we are all here having intelligent conversations on the way forward, like it's a sign for me. it gives us energy because yes, there are some backlashes, there are some political difficulties. It's difficult, it's not an easy task, but the fact that all the countries, all the NGOs, the private sector, they are all here in all these events in Belém to discuss the way forward, I think is just fantastic, you know? And so there is a way forward and a lot is happening. There is this fund, you know, Tropical Forest Forever facility that has been set up. There are a lot of actions. So yes, there is hope.
Thank you for that. What a wonderful note to end on. Thank you all for joining. Thank you to the online audience. Thank you so much to the speakers. And thank you to the Korea Pavilion for hosting us. Thank you so much.
Thank you very much.
Thank you all. Have a good
Thank
day.
you.
Thank you.